Hello and a warm welcome to this week's edition of FMR Finance Weekly, specially curated for our esteemed NRI viewers. I'm excited to have you join us as we conclude our three-part video series, Navigating Business Setup in India, a guide for NRIs. If you have been following this series, you have already explored the different entity structure in India in our first video and learned about the essential registration needed to run a business in the second one. Just in case you have missed watching any of these earlier videos in this segment, I would highly recommend that you do watch the same. We have provided very important information that may be crucial for your business operation in India. Now in this third and final video, we are diving into compliance requirements that each of these entity structure must follow to stay on right side of the law. Whether you are managing a proprietorship, partnership, LLP or a private limited company, understanding the compliance obligation is crucial. Let's jump in and ensure your business is set for long-term success. Let's welcome Chaitanya and ask all we need to know about the various compliance that each entity structure is required to mindful of. Welcome Chaitanya to our final video for this segment. Let's begin with the compliance requirement for the first entity structure. So, Chaitanya, the first question is what are the key compliance a proprietor must follow regularly? When it comes to compliances, isn't it easier than other business structures like companies or LLPs?
First of all, thank you, Neha, for hosting this last segment of the show. To answer your question, yes, you are right. While a proprietorship does have a few compliance obligations, there are still some annual tasks that you shouldn't overlook. Let me walk you through them. First one is the income tax return. Every year, as a proprietor, you need to file your income tax return with the income tax department. It's about reporting all the income your business has earned. So, as a proprietor, you will certainly be required to file your income tax return. The second one is the goods and service tax returns. If you're registered under GST, then your filings of GST returns is a must. So your regular filing would be on a GSTR 3B, GSTR 1, and annual returns and reconciliation are GSTR 9 and 9C. This is very crucial that if you have having a GST number, then all these returns are filed in a timely and regular fashion. Then the next one, the third one for a proprietorship firm would be the tax deducted at source. If your business falls under the TDS provisions, then as a proprietor, you're required to deduct TDS from every payment being made to the vendors or contractors at the prescribed rates. Also equally important is that you deposit that TDS on time and also file your TDS returns, whether it's Form 26Q or 27Q. That is also a mandatory thing. It has to be filed on a quarterly basis. The TDS returns will be filed on a quarterly basis, but the TDS has to be deposited by the 7th of every month end in which the TDS was deducted. Then the fourth, requirement, which is mandatory for a proprietorship firm, is the maintenance of books of accounts. So this is very, very important because if you're as a proprietor, you're maintaining a detailed records of your financial transactions, documenting every sale, purchase, or expense, or even having a comprehensive bank statement records, then your books of accounts will be in order. Also, you will be at the top of your business numbers. You would not have to depend on anyone else to tell you what's going right, what's going wrong. You can take the corrective measures by maintaining the correct books of account. The last one would be compliance with any other applicable laws. So there might be a Shop and Establishment Act or a labor law requirement or an environmental laws, which you need to be careful of, mindful of. You need to be compliant with all those local laws that are applicable to your business. So these are all the 4-5 compliances which a proprietorship firm must be mindful of.
That's really interesting. Now let's move on to partnership firm compliance. It is mandatory to register a partnership firm. What are the legal and regulatory requirements that a partnership firm needs to comply with?
All right. So if I were to answer about the partnership firm compliances, it's very, very important that there are certain compliances which are similar in nature to what proprietorship firm is required to do, but in a more with detailed form because it's a partnership firm, there are partners involved. So as a matter of prudence, as a matter of trust, you need to be mindful of all these compliances, which I'm just gonna talk about. Okay, the first one would be the income tax return. So just like proprietorship, partnership firm also need to file their annual income tax return with the income tax department. You need to report all your partnership's incomes, your expenses, partnership firm's expenses, the deductions which you're claiming, any profit or losses, whether being brought forward or being carried forward. All those things have to be reported in a crisp and clear manner in the income tax return which you're filing. So that will reflect the partnership firm's financial health at the end of the year. The next one would be the GST, as with the case of proprietorship. Similarly, for the GST, for a firm which is registered with the GST department, if your turnover exceeds a certain threshold, then you come under the GST regulations. And then you would need to file your GST returns. You need to file your GST dues in case you are having some kind of input credit, GST input credit. Then you can avail the credit for the same by filing your returns regularly. The next one would be accounting and auditing. Though auditing is not a formal requirement, but then what it does is it's kind of establishes that whatever accounting you're doing, it's in a proper fashion. Anyone to perform an audit, for any chartered accountant to perform an audit on your books of accounts, it is very important that your books of accounts are kept in a good health. They are maintained properly. All the entries are captured in a accounting software. Even if you want to keep it manually, then all of them are kept accurately and are captured on a timely basis. The periodic closures should be maintained. By periodic closures, I mean month-end closures should be there, and followed by year-end closures. Then the next one is compliance with other laws. As with the proprietorship firm, your partnership firm may be also required to follow Shop and Establishment Act or a labor law or environmental regulations. So if you fall under any of those regulations, then you need to be compliant with all those regulations. Then the last one is not a compliance requirement, but it's more of I would say, a healthy habit. That's a tip. While partnerships aren't legally required, but they should hold an annual meeting. What it does is it's bring all the partners together. They can discuss the partnership affairs. They can review the business. They can talk about the financials which have happened. They can plan for the future. So it's more of a partners gathering in a way to review the performance and resolving issues and making any corrective actions or corrective decisions which need to be done for the health of the betterment of the partnership firm.
Okay, I was not aware that partnership firm needs to comply with so many regulations. Now I would like you to help with the regulatory requirements of LLP. What are the key regulatory requirements for an LLP?
All right. The first one would be the annual return filing, which is Form 11. So at the end of the year, an LLP is required to file the annual return Form 11 with the Registrar of Companies within due timelines at the end of every financial year. So it's a snapshot of your LLP's partners' details and other key information. This deadline cannot be missed. It's not an option, it's mandatory, and it could lead to hefty fines if you are misfiling these Form 11 every year. Then the next one would be Statement of Accounts and Solvency, which comes under Form 8. So all the LLP's financial health matters, that is the Statement of Accounts and Solvency, has to be filed under Form 8. So this is filed annually with the ROC. This document confirms that your LLP is solvent and provides an overview of the financial position of the LLP, including assets, liability, and the profit and loss statement. So this will kind of gives a fitness report of your business. So you have to file it within 30 days from the end of 6 months of the financial year. That is, if your financial year is ending 31st March, then 6 months, that is the 30th September. From 30th September, you have got another 30 days to file that Form 8, Statement of Accounts and Solvency. The third one on the list of LLP's compliance is the income tax return filing. With whether it's proprietorship or whether it's a partnership firm, LLP also is required to file their income tax return. Turnover exceeds a certain limit, then they will also be required to get it audited. The accounts need to be audited. So that is also a mandatory thing. In case your threshold level is not crossed, then simple return filing would also be sufficient. The next one would be the GST compliance. If your LLP is registered under GST, then you would have to file your GSTR 1, GSTR 3B, and your annual return filing, that is the GSTR 9. You'll also need to maintain detailed records of your sales, purchase, input tax credit ledger, so that way you will stay compliant with your GST compliance requirement. The next step is more of a healthy practice, as I stated with partnership firms also. You should have a partners meetings and you should record the minutes of those meetings. So that way you are not required to hold AGMs like the private limited companies are required to do. But then these are regular partner meetings. You should minute those meetings properly, so that it helps you come back to those decisions which you had taken, why you had taken. That will all get captured in those minutes. The last one is on the compliance with other applicable laws. So in case your LLP is falling under some sector specific laws or environmental regulations or intellectual property laws, be it the case, so then you would be required to stay compliant with those ones also. Yeah. So these are the 5-6 compliances which LLP should be mindful of.
Okay, these are a really long list of compliance. What special compliance requirement apply to Section 8 companies?
Certainly. Let me help you with the Section 8 companies. So Section 8 companies, as you already know now, that these companies are designed for promoting charitable activities, and this comes with a mission to serve the society in general. So these specific missions also comes with some specific compliance requirements. Let me break it down for you. First one would be the annual return filing, that is the MGT 7. So Section 8 company must file an annual return with the Registrar of Companies, the ROC, within 60 days of their AGM. This form captures the vital details about the company's structure and the management. Then the next one would be the financial statement, that is the form AOC 4. So your company's financial health gets reflected out there. So your financial statements, including the balance sheet, profit and loss account, all those schedules which are necessary to describe each line item under the balance sheet and the profit and loss account, they get captured under the AOC 4. So this needs to be filed within 30 days of the AGM again. This also shows how your funds are being utilized for your charitable goals. So this kind of instills the trust with the donors and the stakeholders. The third one is the income tax return. Even though you are a non-profit entity, the Section 8 company is a non-profit entity, you're still required to file your annual income tax return. So there are certain tax exemptions which your Section 8 company is also eligible for. You can take benefit of that one. So you need to capture your incomes and expenses properly in the income tax return. The fourth one on the list would be GST compliance, if it's applicable on you. If you're registered and then you will have to file your regular GST returns. So proper record keeping and compliance are mandatory. The next one would be the annual general meetings. So Section 8 company comes under ROC. So AGM is a must. AGM is where you present your financials, review your progress, and also the plans for the future. You also adopt the financial statements in a way the shareholders approve them and adopt the Section 8 company adopts this financial statement. The last one would be a compliance with other laws and regulations. So in case your company, Section 8 company is operating under some jurisdiction locally, you need to comply with some environmental or intellectual property regulations, you need to be compliant with all those regulations which are contained in those laws.
That brings us to the last entity structure, private limited company. What are the mandatory compliance for the private limited company?
Okay, yeah. So this is one of the most popular choices for businesses in India, a private limited company. It offers many advantages, but then it demands diligent attention to regulatory requirements. There are so many regulations which you need to be complying with a private limited company. You cannot miss any one of them because it could lead to hefty fines and penalties. So first one on the list is the MGT 7, the annual return filing. So every private limited company must file an annual return with the Registrar of Companies within 60 days of its AGM. This form details the company's structure, management, shareholder information, and other such details. So it's very, very crucial to avoid penalties. You need to file this MGD7 within the due timelines. Then the next one is the financial statements, which is the form AOC4. So your financial statements, including the balance sheets, profit and loss account, cash flow, all these statements along with their respective schedules, this must be filed with the ROC within 30 days of the AGM, right? The third one is the income tax return. So like any other business entity structure, your private limited company is also required to file an annual income tax return. So this would again report your company's income, deductions, profit and losses. Everything would be detailed out in that income tax return. So this has to be filed with the income tax department, not with the ROC. The next one on the list is the GST compliance. So if your company has got registered under GST, then regular compliance is essential. GST 1, 3B, GST 9, these are all the mandatory filings which you need to do. Along with that, you would need to maintain an accurate record of your sales, purchase, input tax credit ledgers for the GST compliance purposes. The fifth one, which is more unique to, I would say, a private limited company and a public limited company for that matter, is the board meetings. So private limited company are required to hold a minimum of 4 board meetings every year with at least 1 meeting in each quarter. So you need to keep the minutes, you need to file those minutes with the ROC. So this is very, very essential. This is mandatory. Then the next one would be the compliance with other laws and regulations. That is, we have discussed it in the previous entity structures. I need not discuss more in that. The last one would be maintaining statutory registers and records. So you need to maintain your statutory registers such as register of members, register of directors, minutes of the board and minutes of board meetings, general meetings. These records are vital for legal compliance and corporate governance purpose. So all these statutory registers and records are very, very essential, and they need to be kept in your registered office or somewhere else, which must be disclosed to your shareholders. Well, I understand that these compliance requirements can seem overwhelming, but you don't have to do it alone. And you can engage with FMR professional for we can take you. We can help you, handhold you to navigate this responsibly, as well as ensure that your business stays compliant while you focus on your growth and innovation. Having an FMR expert by your side can make all the difference and keep your business on the right track. So staying compliant not only keeps your business legally sound, but also sets the stage for growth and success.
And that concludes our comprehensive guide on business compliance for different entity structure in India. With this final video, you have a complete roadmap for choosing the right entity to securing registration and staying compliant. Remember, compliance is not just ticking off all legal requirements. It's all about building a strong foundation for growth and success. If you need expert guidance, our FMR professionals are here to help you navigate every step of the way. If you found this series interesting, don't forget to share, like, subscribe to our YouTube channel, File My Return for more valuable insight on taxation and business finance.
FMR Finance Weekly. Simplify your life with our financial advice.